Hello and welcome to Profiles in Risk. This is your host, Tony Cañas, and today I have with me Dustin Walsey, the co-founder at Buckle. Dustin, thank you for coming on the show today. How's it going?
Tony, it's going great. Thank you very much for having me, and looking forward to spending a few minutes with you this afternoon.
Awesome, thank you. And just before we started recording, we realized that we live like 2 miles away from each other in Atlanta, Georgia. My bad. Given that your LinkedIn shows as Atlanta, I should have said something, maybe recorded in person, but it is what it is.
Next time we'll do this over beers at a longer
Exactly. So Dustin, we always give the chance for the guest to give kind of the elevator pitch. What is Buckle?
Yeah. Again, thanks for having me. Buckle is a financial services platform designed for participants of the gig economy. And very specifically, the first financial service product that we're offering to the world and our drivers is insurance. And it's focused, which started with transportation of people such as Uber and Lyft, and now has evolved into all forms of delivery. So, companies like DoorDash and Grubhub and Amazon Flex and Instacart and everything that's being moved and delivered to our houses. So we work very specifically to cover the drivers that support the world we live in.
Okay, perfect. And I was telling you just before we started recording that this is very close to my heart because I drove Uber and Lyft here in Atlanta. I was already in insurance, and I was unemployed for 5 months. I got a job with Liberty here in Duluth, and the Liberty what's it called, background check takes a month. So
Yep.
so they gave me the offer, and I'm like, I am sick of sitting at home. So I started, and I have a Prius, so it's super gas efficient. So I started driving Uber and Lyft, waiting for the job at Liberty to start, and actually had a lot of fun doing it. I'm really extroverted, met a lot of people, and since I come from insurance, I have my CPCU, and I know what I'm doing here. I knew that my personal auto insurance didn't cover it, right?
Yeah.
So I looked, and I was hoping to add just an endorsement, and this is back in 2015. There was no such thing. The only option was basically getting a full-on commercial policy, which didn't make sense for me, given that I was only driving for a little bit. I kept doing it part-time, but when I kept doing it part-time, it didn't make sense to quadruple my insurance costs.
It became cost prohibitive.
Yeah, for something that I did for a few hours a week, right? So that's what the market looked like, at least here in Georgia, back in 2015. So definitely a desperately needed service. So how's it looking now that we have Buckle as an option?
Yeah, I mean, a lot has changed since 2015, and a lot has also remained the same. I take it, by the way, you enjoyed it a lot, because people who drive for Uber and Lyft tend to be extroverts. They talk to people, and there's a lot of conversation going on there. So it can be a lot of fun as well. But really, the protection gap, which Buckle is really focused on, is enabling people such as yourselves or other drivers out there to use their vehicle to generate revenue and to protect it in a way that is affordable, that provides the correct coverage that the driver needs, that protects potentially their most important asset, their vehicle, and it allows them in a very simple and easy way to buy insurance and drive their car for Uber or Lyft or DoorDash or whomever, and have the right coverage. So what Buckle set out to do, when me and my partner started this, and taking a quick step back, the way it was put together was, if you remember in the early days, Uber started with Uber Black, which was taxi and limousines, and it had a very clear commercial limousine livery insurance policy that are quite expensive. And then it was so popular that it then shifted into the UberX product, and that became the idea for Buckle. And what we figured was, just like you mentioned back in 2015, there were no endorsements back in the day, and there was nothing to cover these drivers. But yet all of a sudden there was this explosion of this type of driver out there that the people, you and I, as not just drivers, but as consumers, loved it. So Buckle was built because when people like you called your insurance companies like, hey, I'm going to drive for Uber, they would actually drop you on the spot because they didn't want you at all because it's a different risk.
Mhm.
So the coverage didn't exist. So people just, drove naked or, without the coverage out there, and it created a problem. And what has happened since then, we've seen some companies, the standard companies, I believe Liberty has one, but I know Progressive, for example, has created a rideshare endorsement that provides some limited coverage for some physical damage and some deductible protections in various periods. But what Buckle went out and created is a total solution that covers the driver no matter how they drive, where they drive, when they drive, with a $500 deductible, with physical damage coverage, with liability coverage, with uninsured motorists, with medical payments, all the traditional coverages out there, for a reasonable premium for the coverage that's provided, that takes into consideration how much they're driving, where they're driving, who they're driving for, and different risks. And I'm sure we'll touch on this in a second, but moving people around has a different risk profile, for example, than moving a pizza or a package or groceries around.
Yeah, the liability is much higher.
Liabilities, bodily injury, all those things are different. So we built our product, our insurance product, around that concept. So we work both with the drivers, but they notify us, and we work with the delivery network companies to figure out what that blend looks like to cover the driver appropriately for a rate that they can afford. And that I think that's the key piece, right? Because commercial is too expensive and personal doesn't provide coverage. So what is that right mix? And it's, I think back in 2015, it was a lot easier in the sense because it was really Uber and Lyft only. Today, it's, that plus, Instacart and Grubhub and DoorDash and Amazon Flex and all the other, hundreds of new startups that are coming out and trying to attract drivers. That makes it now a real challenge that it's really exciting to work on.
How is it underwritten? I mean, I'm sure you look at the vehicle and the driving record, or I think the better question is how is it priced? Does it take into account how many miles I drive personal, how many miles I drive for the apps?
Yeah, so underwriting and pricing really go hand in hand, obviously. So we take traditional underwriting metrics that exist out there, things like MVR report, where you live, zip code, some of those traditional underwriting metrics. And then we marry them with other metrics that we get from the delivery network and transportation network companies, such as time on app, what time they're driving, to build out a risk profile. Because, as someone in the insurance business, knows, a car that's on the road 50 hours a week versus 10 hours a week has a different risk profile. So we take traditional data that probably most insurance companies use, and then we marry that with additional data that we get with our partnerships with all the delivery network companies to get that rate. And once that thing gets married together, we're able to price appropriately.
Okay. So for each person that uses Buckle and is driving a rideshare, does my bill change every month depending on how much I drive?
Good question. So the answer today is no. We use a fixed model of every 6 months we re-underwrite. After 6 months, the rates can change for sure. If you're doing more, if you're doing less over a 6-month average, we'll adjust the price in the offer of the renewal. They're not usually substantial swings. Sometimes they go up, sometimes they go down. 6 months from now, there's a lot of challenges, I think, in the auto insurance industry, just due to inflation, supply chain issues, used car scarcity, labor shortages that are unfortunately driving up the broader insurance market. So I think most people will see rate increases, not just from a buckle policy, but from, Progressive, Geico, State Farm, it doesn't matter. But we do change based on driving history, but then we also take into consideration truly other external factors, which are really driving into this market right now as the insurance markets are hardening rapidly.
Okay, and but the driver doesn't need a separate personal lines policy. This is not built on top of it's
Yeah.
a replacement.
Yes. So this is a replacement to, not in addition to. So a driver would either cancel their current policy and buy a buckle policy, a buckle gig policy, and it takes the best of personal and the best of commercial and merges them together to allow this type of use. Now, if we have, in some markets, we find that drivers could be driving 70, 80, 90 hours a week. And we tend to price out of those markets because that starts looking more like a taxi. Our sweet spot is this part-time driver, which is the vast majority of all drivers out there that fit our model. That is where we're able to get really aggressive. So that's our sweet spot, our niche. That we do really well with.
Okay, and one thing I found really interesting at the beginning when you were explaining what you do, you didn't say insurance. You said financial services for the gig economy participants. So never thought about the other pieces. I think about insurance mostly. So what are the other pieces that you're offering and that you're working on offering later? And do they have trouble in getting the other pieces? Like the rideshare drivers have trouble getting, I don't know, banking or was it just the insurance piece that was really inaccessible?
Yeah, I think there's some, obviously our starting point was insurance, and there's some very adjacent markets or very similar markets around, accidental insurance, health insurance that are tied to that driver. In the roadmap of ours is actually providing credit and helping them lease vehicles, because if we're insuring these vehicles, how do we get them better, safer cars? So we're so focused on this driver who uses this car to generate revenue, and how do we help them have the proper insurance, protect their asset, and then how do we help them buy a car in a reasonable fashion? Because a lot of people who are driving for these companies are buying their cars on B lots, and are paying exorbitant interest rates or unfair prices for a vehicle. So the next piece of this is in the next few years is how do we lease all these people vehicles in a smart fashion that makes the whole ecosystem better.
The population that drives radically changed just from my experiences as a user. I happen to be living in the Bay when Lyft first started, when Uber was still just black car, and Lyft started, and there was a Sidecar also, which went out of business, but Lyft and Sidecar were offering the regular guy in a car, and then UberX started. So in the Bay, the people picking you up were very often white collar contract type workers, like graphic designers, people like that maybe didn't have a 40-hour a week job, but were very white collar, and very, very educated, and by the time that I joined Jacobson, where I work now, and started doing a lot of travel for work. So this is 2018, 2019. In most cities in the States, I get an Uber, and it's very, 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 very often a very recent immigrant. Right. So yeah, population that has a hard time accessing good credit.
I think you just hit the nail on the head. So we don't use credit in anything we do, because the vast majority of this population tends to they might not have credit scores, or they have lower credit scores for a variety of reasons. So in our underwriting and all our modeling and all our, rates, rules, and forms, we don't use that. And again, it's about building a product that people can afford and use, and really help this segment of society that supports the world we live in, right? They supported us during COVID, and I mean, this stuff isn't going
So they
away.
became crucial during COVID.
I mean, they were the front lines.
Yeah, absolutely.
They don't get enough credit, right? They worked. We stayed at home while they brought us our food. They brought us our toilet paper, and they brought us everything. And they changed the habits of the world, at least in the United States. I'm sure it's like that everywhere as well.
And
I mean, my parents use this stuff, so they're critical in moving our goods and services around.
I hadn't thought about it until now, but there's a big difference. So if you use Uber, you might have a conversation, might not have a conversation, but you're sitting there with the other human. For delivery services, especially during the pandemic, it's right. It's frictionless. It's touchless. Like the very idea is like, leave it at my door, ring the doorbell, and run away before I have a chance to exchange air. So they become even more invisible. So that interesting. I had not. I wonder what the sociological implications of that will be.
This is interesting. As in the early days, and we still do this from time to time when we enter a new market. With Uber and Lyft, the nice thing is we can pull up our phone, hit an app, have one of these cars pick us up, and we can actually talk to the driver and explain, hey, this is Buckle, this is the coverage. And very much have we do this. I mean, we really do.
That's fantastic.
And make a connection with the driver, put a face to a company, and those sort of things. The bigger challenges in the food and package delivery is it is invisible in that sense, and it's the guerrilla marketing aspect is a little more challenging.
That leads perfectly to my next question. How is it distributed? Is it entirely direct? Can agents sell it? Is it sold through affiliate relations with other financial websites, kind of thing, or apps?
Today we're direct. The major initiative for this coming year, is to roll it out to the agent networks out there, the independent agents throughout the country.
Perfect timing to come on the podcast.
Yeah, they listen. The independent agents have these really amazing relationships with these people, and what we've learned is, insurance, even a new insurance, is even people have questions, and a lot of questions need to be answered by agents, and so the company is getting ready to roll this out across the country to agents as well. Because
that is fantastic, and for any agents listening, because I do know that about half of our listeners are agents. For any agents listening, I know that you are tempted to think, well, this is not a preferred customer. This is likely not, a homeowner with two cars. True, right? Not the traditional insurance customer, but this is a demographic that is hardworking and will grow into having assets, and their kids will grow into having assets that you'll want to have a relationship with and continue insuring.
Well, I think it's also an easy, nothing's easy to sell, but I think it's an easy conversation for an agent to have with one of their customers. Is like, hey, do you do this, right? And then I have a company for you.
Instead of exactly, yes. Yeah. Instead of risking your policy being canceled, I need to know that you're doing this, and I have a company. Yeah.
And I grew up in the agent world as well, and having these incredible sticky customers at the agency level that grow with you, that refer friends, that refer family members, that then upgrade, renters, homeowners, all these pieces. I mean, I think this is a great way to round out your accounts over time as this offering is rolled out to independent agents.
So I always love asking about your background and kind of where the idea came from. And looking at your LinkedIn, it is interesting. because you had 14 years running an agency, right? And based on the name, it looks like an auto heavy agency.
Yeah,
But before that, you were an account executive in the technology space.
that's right.
So basically, you had the perfect background to create an insurtech. So how did it happen?
Yeah, so I come from a family of entrepreneurs, and I grew up in the newspaper business in the Southeast. So always wanted to own my own company and do my own thing. And I had a Jerry Maguire moment of at an executive MBA program at the Darden School at UVA, where I decided that I wanted just to start my own company, and I spent a lot of time and found my way into the auto insurance business and bought Autotown Insurance in 2008. And that's how I got into the business and learned auto insurance from the retail perspective, and that's how I got there. And from there, that's how Buckle came about, because I was insuring black cars for Uber all in the early 2012, 13, and then they show up and they're like, and I'm insuring now probably 70-80% of them. And by the way I did it was I would just get in the back of Ubers and talk to the drivers and sell them commercial auto insurance. And I met people from Uber, and they're like, hey, we're getting ready to roll out this product called UberX. Well, I didn't have a product to sell them because when
It didn't exist.
Well, right. And if Uber's referring a driver to me, I know you're driving for Uber, so I have to say you use your car for livery. And that actually became the idea for Buckle, because a salesman at heart, when I don't have something to sell, that created the product fit or the product need. And then, from there, the coverage gaps. And fast forward, I guess we technically started, Buckle a little over 5 years ago, and it's just been an incredible run now that we're, in Florida, Texas. We're just expanding fast.
So I'm guessing it started as an MGA.
It started as a pure digital MGA, and today we're a full stack, carrier. We handle all our own claims. We do everything ourselves now.
Oh,
So
okay, wow.
It's been quite an evolution, yeah.
And a lot of the insurtech MGAs are kind of heading in that direction, but not a lot of them are all the way there. And how many states are you currently available in?
We're in a bunch of them. I always off a little. So Georgia, Tennessee, Illinois, DC area, Pennsylvania, Florida, Texas. So I mean, just we're getting to most of the country. We're obviously focused on probably where the bigger cities are, because that tends to be where the delivery networks and the Ubers of the world are really moving things around. So those are our focus. And well, obviously California and New York are going to be on our roadmap here a little further down the line, because they're big, heavy populated states. So we have a pretty aggressive growth strategy over the next 3 to 5 years.
So is the goal about 35, 40 states? Given your product, Montana, Idaho, Wyoming.
I personally look forward to launching Hawaii, but I'll do that one in person. But yeah, I mean, ideally we'll be in all 50, right? But yes, where the people are is usually where it is driving the decision making.
Okay. What was the biggest challenge? So once you figured out, okay, there's a need for this, there's definitely a need for this, but no product exists. So I'm gonna have to go and create the product. So what was that? What was the hardest part of that?
I would say the hardest part, and still today will always be in the risk-bearing business, is finding the proper reinsurance partners, right? In the very beginning, when you're coming up with something that's totally new and there's really no actuarial support or historical data to use to price and underwrite this, getting the reinsurance support to launch this in the beginning, when we were in our infancy with 20, 30 people, was probably the first major hurdle that I had to get over. And then how do we continue to manage our book that protects our reinsurance partners, that allow us to have the capital to grow and thrive. Now, managing a company remote now in this post-COVID world and has its own different operational challenges, but I would say from a very insurance perspective, it's the reinsurance aspect that is it's critical for all these companies.
So are you staying remote first going forward?
Yeah, I think, I mean, we're going to have like centers. We have a bunch of people in Atlanta because this is where we started. We have a bunch of people in San Antonio, in the New York, New Jersey region, and the Chicago region. So we'll have regional offices, but we've really adopted a remote strategy that I think kind of fits nicely with the gig economy world that we live in today. But I will tell you, I mean, it is one of the bigger challenges because it's hard to collaborate and build in a remote fashion, right? The ride in an elevator doesn't exist. There is no that conversation or the water cooler talk. So, but we are remote first, and yeah, but at the same time, it has its advantages because it provides a lot of flexibility.
Awesome. So thank you very much for your time. When it goes live, I will tag both you and Buckle on LinkedIn. It's been a lot of fun, and quite honestly, thank you for building this. I have very soft spot in my heart for the rideshare drivers. It's hard work. They work long hours, and Uber and Lyft have cut pay over and over the years, and they're in so much risk of not being properly covered because
Yes.
of the insurance industry's slow move to cover their activity, which is from the customer's perspective so necessary.
We'll get them covered perfectly eventually across the board, and I'm excited for them. And if I was to leave one message to everybody who's listening at the end, make sure you tip your drivers, tip your delivery partners. They live on that, $2 here, $3 there, $9 there. Just it's an easy thing, and if you can afford to be in an Uber or order food, tip those drivers because it makes a difference to them in their lives.
Yes, thank you for that. Uber did a lot of damage the first few years when the website and the app literally said the tip is included, and there was no such thing. Yes, tip your rideshare drivers and your delivery drivers. Absolutely. Thank you for your time, Dustin.
Oh, my pleasure. I look forward to meeting you in person. Have a good afternoon.